The Olympics is usually a massive catalyst, meaning a reason to invest in stocks from companies tied to the economies hosting the Olympics. Unfortunately, given COVID, this is certainly not the case this year with the Olympics in Japan. It's tragic. In fact, Toyota has even decided not to advertise during the Olympics in Japan, which is a shocking development. And investors can make a fortune investing in companies that benefit from the Olympics, as long-term investment themes tend to last much longer than we think. For example, before the 2008 Beijing Summer Olympics, I worked for a couple different hedge funds that did well based on investing in companies that would benefit from the Beijing Olympics. And this was the mother of all positive and then negative investment catalysts. Let me explain the positive catalyst theme first. So, infrastructure, commodity, and industrial stocks did incredibly well in the years leading up to the 2008 Olympics. And I remember when I worked for a hedge fund before the 2008 Olympic Games, I actually met with the CFO of United Technologies, UTX, which owns the Otis elevator brand. And the CFO of United Technologies told me that more buildings were going to be built in China over the next 5 years than the cumulative total of all buildings ever built in every country since the beginning of time. Think about that. Also, an executive at an engineering services giants, ABB, I think based in Switzerland, he told me years ago that every single year, China builds out the equivalent electricity grid infrastructure of the United Kingdom. Every year. So before the 2008 Olympics, stocks like Caterpillar, Komatsu, Petrobras in Brazil, Crompton and Greaves in India, etc., and many commodity companies did exceptionally well. And by the summer of 2008, commodity prices were ridiculously high, including the price of oil reaching almost $150 per barrel. So of course those aforementioned stocks did incredibly well as positive catalysts. Let me talk about the negative catalyst though. The negative catalyst was a couple of months before the Beijing Summer Olympics in 2008. What the Chinese government did was they decided to stop all industrial production in a 300-mile radius around Beijing so that the whole world wouldn't experience just how terrible pollution is in Beijing. And given the plethora of coal mines in China, and they're still opening new ones now, between 25 and 30% of all pollution above California, where I live, is from mainland China. Now, as a result of China closing industrial production in a 300-mile radius around Beijing a couple months before the 2008 Olympics, as a result of this, and given the global financial crisis as well, the prices of almost all commodities except for gold fell off a cliff, and the aforementioned stocks became great shorts for the hedge funds. So the bottom line is, always look for long-term catalysts when you invest, because investment themes last longer than we think. Now, Beijing will become the first country to host both the Summer and the Winter Olympics, as Beijing is going to host the 2022 Winter Olympics. So now is the time to start looking at investing in international companies that could benefit from spending on infrastructure projects leading up to the 2022 Winter Olympics in Beijing, as opposed to investing in companies headquartered in China, as the Chinese government is unfortunately becoming more communist lately.